Take control of your taxes, the W-4 form explained. So this is the #1 tax finding that we see every single year when we work on personal tax returns. And the reason why is people are not completing their W-4 forms correctly. It's one of these forms that when you get hired by your employer, you fill out, you don't think much about it, and then come time taxes, or you may, years go by, you might get a large bonus, and then when it comes time for taxes, you end up having to write the IRS a large tax bill. And the reason why is the form is not completed correctly. And you have the right to complete this form every day. You can change it every day, once a year, every quarter. And we encourage people, especially those that get bonuses, right before the end of the year, is to tell their employer to withhold extra for taxes. Because employers, if you don't tell them, they will withhold taxes at a lower rate, which is lower than your marginal tax rate on your tax return. And we do have clients where the employer will send them a form saying, hey, we're going to give you a bonus. Let us know how much tax you want to withhold. And if your employer is not doing that, you can definitely request that for them to kind of withhold a certain amount. So in this video, I'm going to walk through a W-4 form, how to complete it, like what's the basis behind it. I'm going to switch gears to kind of like a 1040 personal tax return, so you can kind of see the flow of everything. They're going to shift gears and kind of show you a W-2 form. So I just want to make sure at the end of the video, whether you're 18 years old, you're getting hired for your first job, and you're asked to complete this form, or you're in your 40s, 50s, 60s, and you're still working, you're getting bonuses, you just want to make sure that you go back and double check that this W-4 form is completed correctly. It's September now. There's still a lot of time left to make changes that you need to make before the end of the year. So come April in 2024, you're not shocked with a tax bill. So again, this is the #1 finding that we see working on personal returns. And I just want to do an in-depth video here. If you have any questions, leave them in the comments below, and thanks again for watching. All right, so the first part of this video, and this is going to be a longer video here, but this segment is just on the W-4 form. So here it is. These are one of these forms where when you get hired by a company, by your employer, right, whether you're 18 years of age or you're 40, 50, 60, one of the forms they ask you to fill out is this, okay? And I'm just going to focus on page 1 in this video here, but this is critical to get correct. There's no right or wrong way of completing this, right? Because essentially what this form tells your employer is how much tax you want them to withhold from your paycheck. And based on how you complete this, you can have less tax withheld. So just say you make $10,000 gross a month, you can tell them after you're all done, you know what, I want $100 taken out of my paycheck every month for taxes, okay? Or you can be conservative and say, I want $2,500 taken out of my paycheck every month, okay? And that all is determined based on how you complete this form. So that's it. That's the essence of this W-4 form. That's the purpose of it. Now, when you get hired, you complete it. You can always go back and change it. So it's not like you complete it once and that's done. No, you can change this on a daily basis, monthly, quarterly, annually, right? So it's nothing set in stone. And most employers have an online portal where you can kind of log in and kind of change it. So the form is 4 pages. And, page 1 is the main part that we're going to focus on today. Page 2 is the instructions. Page 3 are some additional calculations that are not required, but are used if you want to figure out some certain, put certain amounts here. I don't recommend you using this. I'm going to show you a online calculator to use, which is a lot easier. And then page 4 here is just some tax table. So to kind of get into it, you're going to put your first, last name, you're going to put your address, and then you're going to put your social security number. And again, this is going to your company's HR department. So that's step 1. The last part of step 1 here is you're going to check off how you file on your tax returns, right? And I'm going to show you a 1040, meaning that if you're single, you're not married, you're going to check the box, I file a single tax return, right? If you're married, file joint, you could select married, file joint, or you can mark single. And the reason why I said you can mark single is because that's a more conservative approach on having more taxes withheld from your paycheck. So you're not like trying to play this game of, all right, I know how much I make, I know how much my spouse makes, so we're going to do this and we're going to try to get in so when we do our tax return at the end of the year, we're not going to owe any tax. You can use this IRS tax estimator tool, which I'll show you later on, and you can certainly kind of select this, and that tax estimator tool is a good tool to kind of really figure out how to complete this form and how much you should have withheld. But that's what this step is you're going to mark the box on how you file your tax return. But like I said, those that are filing a joint return, you can still select single. It's more conservative. You're going to have more tax withheld. Step 2 is if there's multiple jobs or your spouse works, right? There's 3 different options here. Option C, right? Step 2, option C, you only want to check this box if you and your spouse make about the same amount of money, okay? But also, if you check this box, your spouse also has to make sure that they check that box too, okay? So that's important here. Now we go into step 3, claiming dependents and other credits, okay? So what this is telling your employer is, all right, so if you fill this out, okay, so just say you got 2 kids at home, they're both under the age of 17, you take 2 kids, right, 2 children times $2,000, you're going to put $4,000 here, okay? This multiply the number of other dependents. This is if you're taking care of like a parent, right, and they're living in your house, you're taking care of them, and they're a dependent on your tax return. Just say you got one parent you're taking care of, that's $500 here, you would put that there. Add the 2 amounts here, that goes right here. So in this example, that'd be 4,000 plus 500, so that's 4,500 that you put here. By putting any amount here, you're telling your employer, listen, I'm taking care of some additional people here in my family. I need more money for my paycheck, so please withhold less in taxes, okay? Now, your paychecks are going to be higher, right? So you can, feed your children, pay for their school and stuff or whatever. But remember, at the end of the year, when you do your tax return, you're having less tax withheld, right? You're telling your employer by filling any amount here off, you're telling your employer to withhold less tax, right? So your paychecks are higher. And this is the trap that we see people get into, is they're claiming all this, but then when they do their tax return, they got to pay taxes, right? And they're shocked with this tax bill. And this is one of the drivers right here. So even though you have children, you have dependents, doesn't necessarily mean that you have to claim that here, right? And that's why we tell our clients, just put zeros here. Don't put any amounts. Just keep it conservative, put all zeros here. So that's step 3. Step 4 here, these are also optional, right? It's not necessary, but just say you have other income in your household, okay? Like you got dividend income, you got interest income, you sold some stocks during the year, right? There's, some additional income that you're getting on a frequent basis. You would put that total amount here, okay? Deductions. You got the standard deduction. Most people claim the standard deduction. But if you, expect to claim deductions other than the standard deduction, meaning like you itemize, then there's this, calculator here to figure what amount to put here. But again, most people take the standard deduction, and I'll show you this on the 1040 example. So you wouldn't put anything here. And again, we don't see people put amounts here either. Where we do see people put amounts is the extra withholding. So right here. So by putting any amount here, you're telling your employer, so just say you say $100 per pay period. You're telling your employer, hey, I actually want to withhold more taxes, okay? And we see people that do this. We have clients that do this because their spouse owns a business, right? So it's not a W-2 salary, but they own a business and they have to pay tax, but they don't pay quarterly tax estimates, right? So what they're doing here is they're telling this employer, withhold more in taxes for me, okay? And by doing that, they're over withholding, which is fine, but they know they're going to have to pay tax elsewhere, right? So, and they may even do it because they know they sold some stock during the year, or they had some contractor income that didn't have any tax withheld. So they're doing that in advance, right? Which is a smart thing to do. So we see a lot of clients do that, and they're telling their employer, and it may not even be associated with this job that they're, that they're working at here at this company. They just want extra tax withheld, because what they don't want is they don't want a surprise at the end of the year paying the tax bill. They rather overpay than under. That's what this form is for. That's what this line is for. Again, you don't have to do anything here, right? For most people, we recommend just all zeros here. But the discovery that happens, and when we do these personal tax returns, especially for new clients, and we say, hey, there's 2 W-2s here, you owe, $10,000, and they ask why, I go, pull up your W-4 form. And sure enough, they have dependents claim, they have this top portion, not completed correctly, where one marked married file joined and checked this box, and the other one forgot to check the box. It becomes a mess. So, and that's why I say this is the number one tax finding that we see every single year. And that's why we want to make sure that you complete this. So, to link everything together, by completing this form, you're telling your employer how much tax to withhold. And like I said, your employer is withholding the tax. They're keeping it in a bucket. Then every quarter, your employer is sending your tax payments to the IRS on your behalf. Okay. That's their role. That's their duty. Okay. Then at the end of the year, your employer is going to tally up all those taxes that they paid to the IRS on your behalf. Then they're going to complete this W-2 form, and you're going to get that, sometime in January of the following year. So in January 2024, you're going to get your W-2. Box number 1 here says your gross wages, right? So you made $100,000. That's your wages right there. Box number 2 is going to show the amount of tax that your employer withheld on your behalf and paid to the IRS. So the IRS is going to get a copy of this W-2, and you're going to get a copy of this W-2. And depending on how much was withheld, it could be under withheld, meaning that you didn't pay enough tax. And if you under withheld, then when you do your tax return, you got to pay the difference. Or if you over withheld, then you get a refund. Okay. Or if you've done the calculation, to the penny, you're not going to owe anything and you're not going to get a refund. So that's the linkage here. This W-2, how you complete this, is telling your employer how much tax is being withheld. And then the W-2 at the end of the year is going to summarize all that right there. So that's the W-4 in summary. Now I'm going to bring you to this IRS estimator tool, and then I'm going to bring you to a 1040 to kind of link everything together here. So hopefully you found this portion of the video helpful. Thank you for watching. Okay, now that we've gone through the W-4 form, I'm going to show you 2 websites that I'm going to put into the show notes so you can access it and you can kind of play around with it yourselves. The first one, this is kind of like a salary calculator, and it's on ADP's website. ADP is one of the largest payroll providers, and they have this kind of template here, and you can kind of play around with it. So you can, how often you get your, the pay frequency is how often you get paid from your employer. Is it weekly, biweekly, monthly? And then you can put in your salary. So just say you make $150,000 per year, right? And by doing that, you can kind of see, all right, here's my, earnings, right? Here's how much taxes are being taken out. And then here's my take home pay. Okay. So here's the gross amount. Here's the taxes, benefits, if you have any. Here's the take home pay, right? So now let's go to the tax section here, the federal taxes. And remember some of those line items that we were talking about earlier about, how do you file on your tax return? You can do single if you're single, or married file joint if you do file a married file joint if there's 2 of you. But look at the take home pay difference, right? So if we select single, look how that take-home pay is a lot less because more tax is being withheld, right? Just by selecting that alone, okay? And then by doing married file joint, you can see how there's a jump there, right? And that's why when there's two people that earn a wage in their home, the good suggestion is to be conservative and mark that single. Yeah, your take-home pay is going to be less, but there's not going to be a shock at the end of the year of you owing taxes. And this is one of the huge drivers right here, just selecting this alone, that will kind of not be a shock at the end of the year when you do your personal taxes, is by selecting how you file. And again, even though you file married file joint on the tax return, you could still select single. Okay, so that's the first thing I wanted to point out. Now let's go back to married file joint. Remember, there was that other line item on the W-4 form about how many dependents you have and how many dependents you want to claim. Each dependent is $2,000. And I think in the example I gave earlier, to say you have 2 kids, right? So 2 kids times $2,000, that's $4,000. Now watch this take-home pay. Watch what happens to it. So we're going to put $4,000 here. And look, it goes up by over $100, right? And like I said, the reason why it's going up is because they know you have dependents and you're going to use that extra money to pay for food, pay for education, whatever it is to kind of take care of that kid. But listen, there's less tax that's being withheld. So even though your take-home pay is going up, when it comes time for taxes at the end of the year, you may have to owe tax, right? Because less tax is being withheld now. So you can, buy all that stuff, but then at the end of the year, you're going to have to pay it back. And that's why we tell people, put 0 here. Even though you got 3 kids, 4 kids, 1 kid, 2 kids, whatever it is, just put 0, right? It's a conservative approach. Yeah, your paychecks are going to be a little bit lower, but you're not going to be shocked at the end of the year, okay? And then remember that other one where if you get dividend income, if you get, any other type of income here, you're going to put that here. So just say you get, $3,000 a year of extra income. Watch what happens to this. It's going to go down further because you're telling your employer, hey, I got this other income. Please withhold a little bit more to cover this. Okay. That's why, again, I say don't put anything here. This is where the quarterly tax estimates come into play. And then you could say, is there any other deduction amount here? And then remember that additional withholding. Right? So let's go back to, here's your take-home pay, right? It's all zeros here. And we have clients that do this. They actually want to withhold an extra $500 per paycheck, right? So you can say any additional withholding amount. So we're going to put $500 here. Let's take a look at what happens to this. It goes down by $500 because you're telling your employer, your company, take out an additional $500 more in taxes because I know my spouse has another business that earns income. Instead of paying quarterly taxes, we want to take this approach. And that's a whole nother option that you can do. And again, like I said earlier, you can change this daily, weekly, monthly, quarterly. You just go to your company's website. So this is a great tool to kind of play around with, but I wanted to show you the impact of that W-4 form has on your take-home pay and taxes being withheld. So that's that. And then now let's go to the IRS tax withholding estimator. And this is actually a great tool. It asks you a lot of questions, and I recommend that you have a pay stub available as you kind of fill this out, and you have the prior year tax return, and you really know everything because it's going to ask you a bunch of different questions here. Like adjustments to your income. Do you have health savings accounts here? You contribute to your 401k? If so, how much are you contributing? Do you have a job? Does your wife have a job? How much are they getting paid? And then here's your pay stub, right? And I kind of just put in some numbers here. So you're going to need the most recent pay stub. You're going to enter your wages per that pay period and enter wages year to date. And it will actually kind of spit out a result of you're going to owe tax or you're going to have to, or you're going to get a refund. And then there's a link to the W-4 form. So here's this form, and it's going to say, okay, there's an additional withholding that's happening here by how you completed this withholding estimator, tax withholding estimator. So it's great. Again, if you have any questions, let me know. But I think this right here is a great tool to kind of play around with to see the impact on how you're filling out that W-4 form. But as I told you before, if you're married or you're single, selecting this single option is great. It's very conservative, and there's no shocks to the system at the end of the year. And if you do want to do this married file joint, make sure both of you and your spouse are completing this W-4 form in sync, and that you have enough tax being withheld. So the last part of this video, I know it's a long video, I'm going to show you a tax return. And there's one other check to do that I show our clients. It's a calculation that proves out that you're not withholding enough from your paychecks. All right, so the final segment of this video here is on a 1040. And again, I'm going to keep this really quick here. So if you want to know, when we're on the W-4 form and that's section number 1, after you put your name and address, it's going to ask you your filing status, like how you file your tax return. This is where you would look on your personal return. Again, like I said, even though you file a married file joint tax return on the W-4 form, you still can mark that as single, okay? So here's an example, and you can see here total W-2 wages for this family here is $225, right? And you scroll down here on page 2 of the 1040, this is the W-2, right? This is that $25,000. So this is what this tax person's employer paid on their behalf, okay? So this is called income tax withheld, right? So their gross salary was $225, and taxes taken out of there was $25,000, okay? So let's go to a W-2 form. So in the W-2 form, this is where the $225,000 of wages, and on the federal income tax withheld, we showed $25,000, okay? So that's where the W-2 shows up on your 1040. Now, here's the calculation I was talking about earlier. In this example, if you take this $25,000, okay, this is what was withheld, and you divide that by 225, you get an effective tax rate of like 11% or so, okay? So again, if you go to your W-2, you take this amount, divide it by this amount, you're going to get a percentage, okay? In this example, it's around 11%, just over 11%. What we see is, we see that, okay? But then, now in this example, it's a little bad because they're in a refund position, but what you want to do is you want to compare what your total tax due is. In this example, it's $25,000. And that divide that by your total taxable income, okay? In this example, if you do that, you get about 12%, okay? So their total tax divided by total taxable income is about 12%. You can see they're in a slightly refund position here. And part of that is because there was some additional withholding here on a 1099, right? But other than that, they're pretty much on par. So what was withheld from their W-2, and when you look at everything else on their tax return, they're pretty much on par. That 11%, 12%, that's pretty good. What we see a lot though is in the W-2 example, how it was like 11%. It's 11%, but this number is a lot higher. Their total tax due is like $50,000, and their total income is, $500,000 or, just, $700,000. And that percentage, when you take their total tax due, this line here, and divide that by here, it's a larger percentage, okay? Which means that they owe a lot more than what they actually paid in. And that, again, is the driver to the W-4 form because they're not withholding enough taxes. So again, this is very important. This is like a back of the envelope calculation that I do for clients to kind of show them, listen, here's what you're withholding from your paycheck. It's not enough. Here are the facts. Here's what your total tax due is on your taxable income, and you're not withholding enough. You got to change your W-4 forms. So again, this is a very important video. If there's any questions, or if you want to see, another breakdown of this, I'm happy to make another video. In fact, as I'm preparing this video, I might kind of dissect this a little bit more, but hopefully this helps. Thank you.